Yo, what's up everybody? Welcome to part 3 of this 4-part video series I'm putting together to help people manage their finances better. When it comes to wealth creation, it is extremely important that you have a firm grip on your finances and become savvy enough with money to make the right decisions that will enable you to create wealth. Enjoy part 3 where I'll be chatting to you guys about property finance. When it comes to property finance, broadly speaking, there are 3 types of properties, namely being commercial properties, investment properties, and residential properties. In this video, I'll focus on residential properties as they're the most common types of properties that people out there are generally looking to finance. And when it comes to financing residential properties, you generally have 3 options. 1, you can apply for a building bond where you acquire land and you're looking to build the property from scratch. 2, you can buy into a development that someone else is building. So a turnkey or a sectional title in a flat that's gonna come up in a few months' time. Or 3, you can buy an already existing property from someone else. Building bonds are a little bit more complex and require their own separate focus. So in this video, I'll hone into the finance required for buying into an existing property or buying into a new development. When it comes to applying for finance, there are 3 things that the bank will look at. Number 1 is your overall credit profile. In other words, they will look at your credit history and look at the debt levels that you have in your life and how well you've managed these historically. It's worth noting that having a lot of short-term debt in your life is a red flag. So make sure that you try and manage this by minimizing it as much as possible before you apply for property finance. The second thing that the bank will look at is the asset itself. And they will try and ascertain if the property is in a good area with good amenities. They'll even do a valuation to check that whatever the seller is asking for, indeed, there is sufficient value in the asset. And thirdly, they will look at your monthly income and expenditure to work out if you can comfortably afford the monthly repayments. Once these 3 boxes have been ticked, the bank will then proceed to grant you the finance. And the interest that you get is largely determined by the loan to value. In other words, the more of a deposit that you put in, the better the rates that you could potentially get theoretically. The reason for this is for every lend that a bank gives, it needs to hold a certain amount of capital. Now, these capital reserves come at a cost. And when you put in a deposit, you make it less costly for the bank to lend you the money. So if you can afford to put in a deposit, it will bode well in terms of the interest that you can get for your finance. Buying a property is more of a commitment than getting married. Because when you're buying a property, the term of the finance is usually about 20 years, which is 240 months. And always be mindful that when you extend the term to 300 or 360 months, all you're doing is just paying interest for longer. And when the term is extended, the bank is taking more risk because they're getting exposed for longer, and they will charge you a higher interest. And there are certain fees associated with getting property finance. To initiate the loan, the bank will charge you an initiation fee of about 5,985 Rand inclusive of VAT. And there will also be monthly service fees of about 68 Rand 40 cents every single month. To have recourse on the property in the case of a default, the bank will register a mortgage bond over the property. And to do this, they will appoint bond registration attorneys to register the bond in the deeds office, and they will attach bond registration costs to this. The mortgage bond acts as security on the loan, and the cost of this is determined by the value of the bond that the bank will register. As mentioned previously, the bank will also do a valuation on the property. And this valuation means that they will send out a physical valuer to determine the value of the property. And this also comes at a cost. And all these fees that I've mentioned so far, the initiation fee, the bond registration fee, and the valuation fee, can all be capitalized to the bond. So you don't have to pay them upfront. But be mindful of the fact that when you do capitalize them, you will be paying interest on them over the term of the loan. If the property that you're buying is not a new development, in other words, you're buying it from someone else who owned it before, the seller will appoint transfer attorneys who will facilitate transfer of ownership. And these transferring attorneys will charge you fees that are payable directly to them. And any property that is worth 900,000 or less does not incur any transfer fees. Transfer fees cannot be capitalized to the loan. So it's imperative that when you're on the market for a property, especially if you're going to be buying an already existing property, that you save sufficient amount of money for these transfer fees. And there are various calculators that you can use online to get a gauge of how much you should be roughly budgeting for. So buying a property is one of the most important investment decisions that you can make. But as mentioned before, this is a long-term commitment. So it's imperative that you do your homework. Look at the areas that you're thinking of buying into. Understand how well properties in those areas do. Is it a thriving environment for properties? Think about your exit strategy in a few years' time. If you were to sell, is it easy for you to come out of that certain area? Remember that whenever banks provide finances, they will be looking to manage or mitigate their risk as much as possible. So look at your own credit profile. How well have you managed your debt historically? Do you have a lot of unsecured debt, or do you have a lot of exposure overall? Secondly, how good is your monthly surplus? When you look at your income minus expenditure, do you comfortably have enough money to afford the loan? When you're applying for property finance, push to get an access facility. In other words, push to get the kind of facility where you can easily deposit more funds into the loan account and also withdraw those funds should you need them. This will enable you to use that loan account as a savings tool to help you save on interest over the term of the loan. And remember, bond registrations usually take about 2 to 3 months. So it's equally important that you are very patient in this endeavor, to do your homework and make sure that you're well planned and catered for while the bond takes time to register. I hope this has been extremely helpful in giving you a little bit of financial literacy when it comes to buying properties and help you become a little bit more savvy when it comes to making investment decisions around buying properties. Check out part 4 of this 4-part video series where I'll be chatting to you guys about financing businesses and the kind of things you need to be looking out for when you're looking for business finance. Don't miss out. Promise you, it's going to be a movie. One love.